I don't know about you, but when a legend speaks, I tend to listen to it. Billionaires who've done it, who've been through the market cycles, when they speak about the current market cycles, I pay attention. I'm sorry, but if there's a 29-year-old YouTuber out there who doesn't have the battle scars, who's never been through a cycle, who's never literally lost thousands, millions of dollars, and doesn't understand how these cycles work, I'm not paying attention to that person. I'm going to be listening instead to someone like Paul Tudor Jones, who has been there, who has become a billionaire, who is one of the legends in the business and understands these cycles better than just about anyone. And most recently, he accurately predicted in early 2020 the absolute collapse of the stock market when he was at Davos. He said COVID would absolutely crush the stock market. He was right. And people who paid attention to him made millions of dollars. Well, he's speaking again today, speaking about a number of issues, namely inflation. Secondly, Bitcoin. Here he is, Paul Tudor Jones, speaking about inflation and why this is an absolute disaster that's already in the making. And if we don't pay attention to it, we will be headed for a major collapse.
The idea that inflation is transitory, to me, is that one just doesn't work the way I see the world. So I look at $88 trillion of assets under management by asset managers. Of that, $670 billion are invested in commodity indices like Bloomberg Commodity Index, Goldman Sachs Commodity Index. That's about 0.75%. If I rewind just to 2011, when inflation was peaking at 3%, not CPI at 4.9, those same investors had 1.2% of their assets, which would imply today, if they just got back to weight, another $400 billion of buying in commodity indices. And if you, certainly the impact models that we run would argue that GSEI or BCOM would double or triple. So you've got, if I just look at where asset managers are, 60-40 types, the one thing that they should be invested in, they're not invested in, probably because they're hearing these assurances that inflation's transitory. So you've got this massive short, really, in the commodity complex, a massive short there. So that makes me think that, and I look at the balances in a variety of commodities, and they're all so razor thin. They're all so razor thin. And this is just what happens if institutional money would get to where they should be, given the level of real rates. What happens if the Reddit crowd ever gets into commodities? God forbid if the bullies, the financial markets, ever were to take it on, for instance, like retail did back in the 70s.
I saw a lot of questions about this today. What exactly is Paul talking about here? Is he saying that we should be buying into gold and silver and other commodities? Yes, that's exactly what he's saying, but also real estate. One of the reasons I'm so bullish on real estate as a hedge against inflation. Remember, throughout history, there have been almost no comparison to real estate. In fact, later this week, we're going to be looking at some different real estate companies, areas that I'm very bullish on right now, investing in land, also long-term buy and hold real estate as a hedge against inflation. Just think about this for a second. There is nothing that comes close to real estate as an investment, as a hedge against inflation. Not only is it a tax shelter that protects you and you're able to depreciate that asset, it is historically outpaced inflation 2-3 points consistently throughout its history. That means real estate investing on its face is already a built-in hedge against inflation. Then take into rising home prices, the overall absolute demand for houses across the country right now. We are in an affordable housing crisis in the United States. We need homes. We need upwards of 20 million units. Therefore, when you invest in real estate, you're not only getting the tax benefits of investing in real estate, you're getting a hedge against inflation. But on top of that, if you're doing it correctly and you're buying rental real estate, you are getting cash flow, which is the ultimate investment. So again, Paul Tudor Jones talking about commodities, other areas of investing. But I just want to say this about him. He is a billionaire. And so, yes, we can, as regular investors, as regular traders, look at what he's doing and say to ourselves, okay, he's saying inflation is going to become a huge concern. Do we want to be in certain sectors that are going to be pounded by inflation? And I can sit back as an investor, a 401k person or whatever, and say, okay, I'm going to remove myself from these certain sectors. I'm going to start being a little safer. I'm going to invest in gold. I'm going to invest in real estate. I'm going to buy Bitcoin. Those things are signals for us to pay attention to. And if you're not hearing what he's saying, you could be left in the lurch. So Paul was also asked about Bitcoin. And of course, everyone wanted to see, where does he come down on this new cryptocurrency, this new people's currency, which I am a huge champion of. I think it is absolutely empowering to millions of people around the world, those people who are unbanked, who do not have access to capital in the way that other people do, the way that it could actually lift up entire populations. Look at El Salvador. Look at other countries that are now adopting it as a standard, just like gold. What does Paul Tudor Jones think about Bitcoin?
I like Bitcoin, right? Bitcoin is math, and math has been around for thousands of years, and 2 plus 2 is going to equal 4, and it will for the next 2,000 years. So I like the idea of investing in something that's reliable, consistent, honest, and 100% certain. So Bitcoin has appealed to me because it's a way for me to invest in certainty, where, again, I look at the difference between the Fed of 2013, the Fed of 2021. I'm going, how can this, do I want to have faith necessarily? I look at the difference between Trump and Biden. Do I want to have faith in that same reliability and consistency of human nature and the linear nature of human nature, which we know is anything but that?
Wow. Mind-blowing. There he is, the legend, saying that he believes moving his position from 1% to 5%. And he doesn't disagree with math. He really believes that it is a long-term store of value, and that in the long term, Bitcoin is math. It is energy. It is a bank in cyberspace, and he doesn't argue with math. Here's what else he had to say about Bitcoin.
I like Bitcoin as a portfolio diversifier. Everyone always asks me, what should I do with my portfolio? My employees say, I say, okay, listen, the only thing that I know for certain is I want to have 5% in gold, 5% in Bitcoin, 5% in cash, 5% in commodities at this point in time. I don't know what I want to do with the other 80%. I want to wait and see what the Fed's going to do, because what they do will have a big impact.
Let me ask you about
There he is, the legend, Paul Tudor Jones. I'm curious in the comments, what are you doing right now? Are you going to be making any hedges against inflation in your own portfolio if you have a 401k or other investment strategy? Are you going to be making some moves right now? Are you going to be investing in real estate? Are you going to be investing in commodities like gold, silver, or copper? What are you planning to do? What about Bitcoin? Do you agree with him that 5% of your portfolio should be in Bitcoin or other cryptocurrencies? I personally believe it should be much higher than that. I have friends, Anthony Pompliano, guest of the show, who thinks it's nearly 100% of your portfolio is what he is in Bitcoin. Where do you come down on that? Drop me a comment below, and be sure to check out my full interview that I did with Michael Saylor on the future of cryptocurrency and inflation as it relates to the US dollar. Click that video and check it out right now. We'll see you next time.